This video is from Chapter 4, where you're going to learn about the journal, the general journal, and the ledger, the general ledger. The journal is the first place that accountants write their transactions. If you had a computerized accounting program that you purchased, the first screen that would come up would be the journal. So we're going to take the information that we learned in Chapter 3. We learned about debits and credits, which account is going to be debited, which account will be credited, and we're going to record that in this journal. Now if you notice, this journal is called a general journal, and this is a journal where any type of transaction can be recorded. Just like general admission to a concert, anyone can go in. There are no special seats. This journal allows that. Later on, you may be learning that there are special journals where only certain transactions can go in. But this journal, any type of transaction can be recorded. So I'm going to take an exercise from Chapter 4, in the back of Chapter 4, which is going to be exercise 4.2a, if you want to follow along with me. And I'm going to show you how you record it into the journal. We're also going to start using dates. Instead of A, B, C, D, we're going to have the date of the transaction. So the very first thing, you may put the year. For instance, this is 2017. So I would record on the very top line, 2017. And the date of the first transaction would be, say for instance, let's say February the 1st. So on February the 1st, I'm going to record February, and in this little column would be the 1st. The owner of the business, opening a new business, is going to invest $5,000 to start her business. Maybe she's opening a little art studio, and she's going to sell her art. So in Chapter 3, we learned that when you're entering money into the cash account, it's going to be debited. So from now on, we're going to write the debit first. Whichever account is debited goes first. So in this case, cash is debited. So I'm going to write the account cash against the margin. So the debit is written against the margin. And we're going to go over to the debit column, and we're going to put the amount, which is $500. $500 is in the debit column. Now, the owner invested the cash. It was her personal money being invested in her business. So the second account is going to be capital, and that's going to be the credit amount. So we're going to indent like a half of an inch and write the account capital. And over in the credit column, I'm going to put the amount, 500. So here you can easily see that you need the same amount. It has to balance. The debit has to equal the credit. The third line of the transaction is just a simple explanation of the transaction. You can indent maybe a half inch more. I'm going to write original investment. Or opening investment. You can put any explanation you want. It does not have to match mine. It doesn't have to match anyone else's. It's just to explain simply the transaction that happened. Now we're going to skip a line between the transactions just so that it's easy to look at and distinguish one transaction from the other. So let's say that on February the 10th, paid office rent. A little bit late, but finally rented an office. So this time, rent expense is the debit. Once you decide which account is debited, you can still make your T accounts on scratch paper, a debit and the credit, and decide which one is the debit. So I'm going to write rent expense on the first line, and the amount is $500. And cash is the credit. So I'm going to indent, and cash goes in the credit column. And this transaction is, I'm simply going to say paid February rent. And actually, I'm noticing that I have a mistake. And sometimes you can make mistakes, even the accountant. But when you catch the mistake, before you put it into the information in another book that we're going to do, you can simply scratch the amount out, write the correct amount. This should be $5,000, not $500. So I'm going to simply scratch it, put 5,000, and initial it. I'm going to put TD, the Terry Drola, TD, Terry Drola. So someone can see who changed the amount, the initials. You cannot erase. You can't white out. You can scratch a line through it. It's called the ruling method to correct an entry, and you initial it. All right, let's say the next thing that happened, let's say on the 15th of the month, I'm going to skip a line, purchased office supplies on account for $300. So in this instance, office supplies is going to be the debit. So I'm going to write office supplies. The debit, $300 in the debit column, and bought it on account. So that would be accounts payable. So I'm going to write accounts payable on the second line. And we're going to have a credit of $300. Simply concede the debit and the credit. I'm simply going to say Visa. I charge it on my Visa card. It's telling you what you bought there, so I don't feel like you need to have anything else there. That's up to you. If you want to say where you bought the supplies or what they were, you can use as many lines as you want for the explanation. The fourth thing that happened, let's say on the 18th, I'm going to skip a line, is she received cash for a piece of art, for a service. Maybe she painted a painting for someone and received $400 in cash. So cash is the debit. When you decide what is the debit, write the debit first, 400 in the debit column. And she earned the $400 because she earned a fee. She painted a picture. So I'm simply going to say fees earned. That is a revenue account. And it has different names. It could be called service fees, fees earned, services performed, but it's a revenue. And if you want, you could put your customer's name, whoever you receive that money from, or maybe the piece of art. I'm just going to put Mary Smith. And paid. She paid. Okay, I can tell she paid. She's paid up. Okay, let's say on the 20th, I'm going to skip a line. And now we're making, or this woman is making a payment on the amount she owes from the 15th of the month. When she bought those supplies, she owes $300 on her Visa bill. So she's making a $50 payment on her account, on her charge account. So when you make a payment, the account payable goes first because we're reducing the amount she owes. Accounts payable, $50, and cash is a credit for $50. Now, I know, because I'm a teacher, I know which account is debited and credited. You may still have to make your T accounts and look at your pluses and minuses and know that account payable when you're making a payment is the debit side. That's your minus side. So I'm going to just say a payment Visa. All right, now let's say on the 25th, let's see what's happening. oh, she performed another service for someone for $300 on account. So she may have painted another painting for someone for $300 on account. That means she did not receive cash yet. Someone owes her $300. So that's going to be accounts receivable. And I'm going to debit $300. That's my plus side of accounts receivable. And I'm going to credit fees earned because she did the work. So she earned it. $300. And I'm going to put the name of Susan Jones. And I'm just put O's. And the last transaction is she's going to receive $100 from Susan Jones on the amount that she owes. So it's going to read, receive a cash for an amount owed by the customer, $100. So let's say on the 30th, she's receiving cash of $100. So cash is the debit, and accounts receivable is going to be the credit. We're reducing what Susan Jones owes. And I'm just going to say payment Susan Jones. I hardly have any room here. Good thing I'm ending. Okay. So this is called journalizing. If you want, you can add up both columns to make sure they balance with a little footing at the bottom. You don't have to. This is called journalizing. It's a chronological date order. 1st, the 10th, the 15th, 18th, 20th, 25th, 30th. And it's the first thing that we do. Now, I'm going to give you a few helpful hints to make this easy for you. So I'm going to stop this video, and I'm going to give you another video with some helpful hints on how you could write this very easily. So I'll be back in a few minutes.